watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell sets to ring in just about 30 seconds. We do have a holiday-shortened week. 6 trading sessions left in the year. The Dow coming off its best week since October. Europe coming off their best week in about 8 months and not giving back too much here at the open. Futures look pretty good. Amid a flurry of big-time corporate news, upgrades on the U.S. economy from the IMF, consumer spending at its best level since June. There's the bell. And down here at the New York Stock Exchange, ringing the bell, Essent Group, a Bermuda-based holding company providing private mortgage insurance over at the NASDAQ, the Alumni Association of the Birla Institute of Technology and Science in Pilani, India.
Is it always like this, or is this because of the holidays? That was loud.
No, that's a regular opening bell.
Yeah,
there's a lot of excitement here.
We should mention, by the way, Sarah, this is your first time on at Post 9 with us anyway. It's great having you. You bring so much to the party, so thank you for
Well, thank you very much.
Down.
Interesting markets here as we close out the year. Record highs. The S&P 500 on track for its best year since 1997.
And Dan and I were just talking during the break, if you strip out some of those excess years of the late 90s, you actually got to go back to the mid-70s.
That's correct. If you take out 95 and 97, which I'm not sure that you can do, but if you were to do it, ascribing it to some sort of excesses in the 90s, you've got to go back to 1975 to find an S&P 500 that was better than this one. That's quite a long period of time.
And the Dow recently hit a benchmark. It went over its inflation-adjusted high, which is significant as well.
Yeah, I think, again, the arguments that are being ascribed to consumers have regained some of their losses. We don't have to bore our viewers with the concept of money illusion, how people don't operate on an inflation-adjusted basis, but it does speak to the fact that the market has gone up 170% over the last couple of years, and regarding the consumer more generally, that's better than going down 170%.
Yeah, market's going to be driven this morning largely by Apple. The #1 gainer on the S&P is up more than 3%, as we told you in the past half hour, finally signing that deal with China Unicom, the China Mobile, I should say, the biggest wireless provider in the world, 700 plus million potential subscribers, could add $3 billion to revenue next year. #2, though, is going to be Darden. Dan, DRI, first it was Barrington Capital putting some pressure on the company. Now Starboard Value wants a more drastic breakup than the one that was proposed last week.
Yeah, I think regarding Darden, obviously, you have a lot of activist investors getting closer towards pushing this company to spin off some of its assets. I don't have any particular insight into this, but obviously, given what some of its competitors have done, like a Starbucks, there's obviously a considerable amount of pressure on Darden to do something.
What is interesting is the Starboard stake is, I believe it's going to be, according to the press reports, 5.6% is what they'll reveal today, and they built that stake as the shares fell on Thursday in response to the lack of action, as many saw it, from management. So they obviously perceive that there is a battle still to be won further down the line, Carl.
Sure, and again, just to talking about the price action in the stock, the S&P 500 has obviously gone up considerably during the recovery. Darden is, relatively speaking, unchanged since somewhere around the spring or summer of 2010. So from an activist investor standpoint, it's perfect.
I wonder if this tells us that next year the wave of activism is going to continue. We've seen so many high-profile cases moving stocks like this. I wonder if this environment is ripe for the activists to come back in 2014.
Yeah. Facebook's going to get some attention, of course, after pricing that secondary last week, 70 million shares at 55.05. Dan, they said it was a brilliantly timed secondary because they were then added to the S&P the following day. It's up 1%, back to 55.76.
Yeah, full disclosure, my company has a buy on Facebook. We think it's going higher. Regarding the secondary, I mean, listen, a lot of these stocks, whether it's Twitter or Facebook or Groupon or Zynga, you see these instances pop up where insiders divest themselves of some of their holdings. It ends up being a short-term disruption to the market. In some cases, in other cases, it's irrelevant. Largely speaking, what matters if you're looking at Facebook, if you want to invest in the name, is the secular trends that are going to drive the stock higher or lower. And Mark Zuckerberg meeting a tax bill with a little bit of a sale isn't going to interrupt that. Yeah.
Housing's going to be in focus today. KBH did get an upgrade out of Citi to a neutral this time, talking about some potential earnings recovering. It has underperformed the S&P so far this year. It will be interesting, though, to see, guys, how housing plays fair in a moderately moving, but moving mortgage environment.
To the point that Art makes, you know, the big question for 2014 is interest rates for the market in general, and clearly mortgage rates for the housing sector in particular. And so far, so good. You've got that taper announcement. You haven't broken substantially higher on the 10-year, but that is the big question, according to many, for next year.
And it's not just mortgage rates. If consumer is healthy, as we've seen from the latest GDP report and other signals, if you're seeing the jobs market improve, which we have, that should bode well for housing on this upward momentum. I mean, you see housing as a bright spot, Dan, next year?
I'm hesitant to call it a bright spot, but I think the greatest fears of some market participants that there's going to be some spike in interest rates, which is the boogeyman for every market, from stocks to bonds, obviously, to housing.
What's the breaking point for mortgage rates where it starts to get worrisome?
Well, again, we talked earlier about whether I was sort of facetiously asking Art about why a 3% level would be scary. It's about speed. And as you saw in the sell-off earlier this year, it gave the housing market a little bit of trouble. Existing home sales at 4.9 million are a bit off their high. We think that they're going higher, and generally speaking, for the economy more generally, housing should continue to contribute. It may not contribute to the same degree. It may not be what it was in 2006, but generally speaking, we don't see the death knell of housing in 2014.
The danger is that affordability falls more rapidly, because you already have, on some of those hotter housing markets, huge gains in price, like San Francisco, over the period of time, as interest rates are rising, right?
Sure, but to put this in something of a perspective, because housing bubble now is as popular as equity bubble, only 2 of the major 20 markets are above the pre-crisis peak, Denver and Dallas. And I was just in Denver, and we have an office in Dallas, and they can sort of confirm what's going on in those markets. But for a lot of those markets, like Las Vegas, they're still 40, 30% below that pre-crisis peak. So there's still, whether you agree that they should be there or not, there's still plenty of room to go on the upside, we think.
Yeah. Speaking of stocks without much upside today, Micron did get a downgrade over at Bank of America Merrill Lynch to underperform. That's down about 3%. We are seeing some random retail names as well among the losers. Nike having some problems getting out of the gate. Michael Kors, of course, we know what a winner that's been this year. And then Target, no surprise, after traffic reportedly did fall 3 to 4% year over year over last year's pre-Christmas weekend. Target is down about a little less than 1%. You worried at all, Dan, about, as they call it, just weak breadth in the market right now? The year largely being carried on the shoulders of a few specific companies.
Well, I actually disagree with that, and I don't think we have the chart, but if you well, I tend to disagree with everything, but I don't think we have the chart here. But what's going on right now is, if you take a look at the S&P 500's gains for the year, it's the top 20 names, which is an arbitrary number, but the top 20 names explain somewhere, I forget the number, somewhere around 20% of the index's gains. That compares in oh, there it is, perfect. Somewhere around 20% of the gains. That compares to 99, where the top 20% of names accounted for virtually all, somewhere around 90% of the index's gains. I would argue, akin to 95, that this is a much broader rally. A couple of names get the spotlight, so to speak, but the index as a whole is higher, and that, all else equal, is a good thing.
What does it tell you?
It tells me that the breadth is better. Now, listen, Bespoke is correct. There's some deterioration right now. The internals are not as strong today as they may have been a week or a month ago. But again, when you see this many stocks higher, it speaks to broader confidence. That does not mean that stocks can't go down, but it's more healthy.
I wonder if it's this whole question of the Fed driving everything. Investors were so obsessed by the question of taper on, taper off. Now that we know that the taper is there, is this going to be a more normal market driven by economic reports, driven by earnings reports? Remember that?
And more volatile.
Well, listen, I mean, the higher volatility trade, something BTIG's options desk has been dealing with for 2 years now, the higher volatility trade has been a fail for 18 months, no matter how many times investors
He said with the VIX at 13 today.
With the VIX, yeah, exactly. And actually, I met with a client the other day who thought the VIX was too high, but that's another story. Listen, I think the taper is obviously front and center on investors' concerns. I think whereas the initial move is obviously in the books, this now becomes a way of life for us. With each successive meeting, is it 10 billion? Steve Leisman got out of Jeff Lacker this morning. The range should be thought of as somewhere around 0 to 20. This is something we're going to have to deal with month after month, and is part of our larger story that this is just a terrible way to run monetary policy. But that's a much larger.
Good op-ed by Samuelson today on that point about how the Fed has been an exercise in frustration for years, essentially. But that's a topic for a different time.
100 years old
yes,
today.
100 years old today. And by the way, the S&P is now almost exactly 400 points higher for the year. Let's get to Pisani, see what's moving on the floor. Bob?
Hello, everybody. Happy happy Monday. I want to put up something a little unusual. The NASDAQ, the Russell 2000, by my look here, is up 5% this morning, and I'm trying to figure out why that's happening. We did have some rebalancings of some of the indexes on Friday. The S&P 500, there you see it, up 5%. The Russell, the S&P 500 was rebalanced, the NASDAQ was rebalanced, but not the Russell 2000. Some of the components of the NASDAQ are in the Russell, of course. I'm going to check on that and get you some more information. Stock futures have been up most of the night. We had the IMF revision for the U.S. growth forecast in 2014. I got the usual